Altcoin market 101, and it's actually a very big topic. Altcoin markets. There's the trading aspect of it, and the entire understanding of market and how to understand price aspect of it, and it's very hard to narrow it down to like half an hour or an hour. So I try to select the topics that most interest us and that I feel we lack. Okay, so we're gonna touch some, we're gonna try and understand what exactly is a price for any commodity, in this case skin or other altcoins. What exactly is a price, how to understand it, how to look at a chart and understand where the price is going. For example, let's say, of course, we're interested in Kin's price. So let's say you see a big spike in the price. You want to understand why did this spike happen, what is going to happen next, stuff like that. For example, take for example the latest Bitcoin crash, the one in what month was that? I don't know, a few months ago, 2 months ago. So during that crash, there were many investors, many people that held Bitcoin, and they didn't seem too worried. I mean, they had some info that told them, some info that made them think or believe that this crash isn't a big issue, it's okay. They even recommended other friends to actually buy Bitcoin. It's called buying at the dip, buying Bitcoin when it's low. And indeed, Bitcoin grew and is still growing very strong. So there are some aspects to price and to the behavior of a coin in a market that I feel we can discuss and we can understand better, just for our own, general knowledge, and of course specifically for because that's what we do. We are dealing with an altcoin, actually, Kin. So let's begin. So these are just a couple of the topics I wanted to cover. We will try and understand what exactly is a price. There's gravity here, just a second. So we'll try and understand what exactly is a price. Where is it determined? Just a second. How and where is it determined? We're gonna actually do some live demo, not exactly trading demo. This talk isn't about trading, and just a disclaimer, don't do it. You don't have enough time to do it. I mean, I've tried it. It's very hard. You have to really put yourself into it if you're gonna try and make money off of trading. But some of us hold Kin, some of us wanna just know how this works. So we'll see how and where price is determined. We'll look at markets, at real live markets. We'll see what affects the price, and we'll touch some of the tools. Like most of you know most of them. So first of all, for the definition of price. So from Wikipedia, price is the quantity of payment or compensation given by one party to another in return for goods or services. Basically, it just means that price is what someone is willing to pay for something. Okay, so if I'm offering you a cup of coffee and I've set the price to $100, if you paid it, that's the coffee price now. Other people might come and offer the same cup of coffee for $5, and other transactions will occur, and the price will be set to $5. So this is the essence of it. And when we look at altcoin markets on everything, Kin or any other currency, we'll most likely look at these charts, at these candle charts. So I'm gonna actually go ahead and jump right into this chart to understanding what are these figures, what are these candlesticks. It's called candlesticks. It's very simple. It looks complicated, especially when you look at something like, let me just do a quick jump. Especially when you look at something like that with all kinds of indicators and data, and I can open a bunch of windows that don't mean a lot to you, okay? But it's actually very simple. It all comes down to, just a second, it all comes down to this, okay? And for that, we're gonna actually use this technology I have here. It's a board. You write stuff on it, okay? So I want you to first understand what a candlestick is, okay? So when you look at the chart, you see all these candlesticks like we had in the image there. And a candlestick represents the behavior of a price over a certain time frame. Whenever you're trading something, whenever you're selling something or buying, you're doing it in a certain time frame. I could be trading within the 1 hour time frame. I could be trading within the second time frame if I'm doing some algo trading and I'm really close to the market. You could be trading in a day, month, week, whatever time frame. But the main concept of a candlestick is the same. It represents the behavior of the price within one time frame. And if you don't understand the concept of time frame, we'll look at it right away, okay? We'll have it in a few minutes. We'll look at the chart, we'll look at a real market example, and we'll see what a time frame is. But for now, it's just the slot of time that transactions occurred in. So I'm guessing you already looked and you already saw. Let me see, that candles are always green or red, okay? So let's see how a candle behaves. So when a time frame begins, when a new hour opened, the price is set somewhere, okay? Someone was willing to pay an X amount for this coin. For now, let's just use king. Someone was willing to pay 0 something 18 Ether for one king. As the hour went by, some other people agreed to pay some other prices. Higher. In this case, these are higher prices. We're going to go for a green candle. Okay, and this body of the candle is being formed. Okay, so the large part, the large opaque part, this part, is called the body. Okay. And then some time later, the less people agreed to this price, and the price went down a little. So what you get from that is what we call the wick of the candle. Okay, so the price was at some point, let's say we're looking at the 1 hour time frame, okay?
Wick like being weak?
No. A wick like a candle's wick.
W-I-C-K. Ah, okay.
What he said?
Till,
yeah. So at some point the price was here, okay, at the wick stick, at some point, but then it went down. And let's say that some people went for lower prices and then it went back up. So we're gonna have a bottom wick as well, okay? So this figure just describes the behavior of the price within this time frame, okay? The price opened here. It closed, when the hour ended, it closed here. That's why the candle is green, because it closed higher than it opened. And it also had some fluctuations at the top and in the bottom. And if you want to just see how a red candle is being formed, that would be actually just opening here and closing here. So the price opened, some trades were made, okay? Let's say up until this point, and then it went back, and when the price closed, it closed here. So we're going to have this body. Let's say that there were no higher prices than the opening price, so we're not going to have a top wick. Okay, so we're going to have this body, and we're going to have a long wick here.
Isn't it also related to 75% of the trades or something?
Yes, there is a factor of what exactly affects the price. I mean, what trade exactly would move the price? There is this factor when trading. I mean, it's unrealistic that if I sell you one kin within a market that rolls, I don't know, like $500,000 worth of kin, and I sell you like one kin in some very high price, it's unrealistic that that would set a price or even change something. So there are algorithms in the markets that take only, you know,
the big trades.
The big trades, yeah.
So, the big trades, yeah.
So, and why am I diving right into candlesticks is because this is the essence. I mean, candlesticks are the essence of understanding the price because they actually tell a story. When you look at a candlestick or a bunch of candlesticks, like this is the Bitcoin, for example, you can get a very clear picture of how the price of a coin behaves. You could see if you, for example, any market that has candlesticks with very short bodies and very long wicks is considered a volatile market, because you know that the price opened at some point, closed at some other point that was pretty close to the opening price, and that there were very high fluctuations of the price during that time frame. So looking at candles and understanding exactly what they are is pretty important when you're trying to understand the price.
Can I ask a question?
Yeah, about candles, sure.
Yes, usually like the next candle starts when the other one ends, but sometimes it's starting in the middle.
Yes.
So how is it possible?
What do you mean?
Like most of the time when the red one, when it ends, and the second day it's or second hour or minute.
I think I have
It's continue the candle continue from the last known.
Yeah, okay, I understand what you're saying. It's not. It doesn't make. Wait, the next candle doesn't start when doesn't start at the price. The price of the next candle, the opening price, doesn't start at the end of the previous candle. It starts at the first trade. So this ended here. Okay, this ended here, and then it went here. Nothing happened, but the first trade was here. Okay. So it's for every time frame. It's from the first trade to the last trade.
The time frame is 1 hour.
You can choose.
So yeah, you can choose. So for example, algo traders. Okay, so let's just look at the market now. This. So again, we're looking at. In this case, this is Ripple, if you know this coin. And the actual interface I'm looking at is called Coinigi. Specifically, when you're trading, there are several exchanges. There are big exchanges and small exchanges. Currently, Kin, for example, is only traded on Ether Delta, which is considered a small exchange. We'll later look at what exactly is the effect of the volume on how a coin is being traded. I mean, you wouldn't want to trade a coin that is trading in very low volumes. I mean, I'm saying you, but any coin that is traded in very low volumes isn't really considered liquid enough, and we'll talk about liquidity in a second. In this case, we're looking at an interface that actually interacts with BitRX, one of the biggest exchanges. There are many interfaces for that. There's TradingView and Coinigi and some other interfaces. They all work the same way. They have an API to the exchange place. You just set the API keys and you give permissions, and you could set sell orders and buy orders, and we'll talk about these a little later. And again, this is not for you to actually do these orders, but just to understand how these markets work. So first thing to understand about trading is that we're always talking about pairs. I mean, if we're talking about Kin, for example, let me just show the list of pairs. No, exit full screen. Okay. So I have a list there of pairs. This is like the favorites, just some favorites. Every coin that you're trading, you're going to trade against something. So if I buy a cup of coffee and I pay dollars, so I'm trading coffee and dollars. If I'm trading Kin, for example, so currently the only pair available, if I'm not mistaken, is Kin and Ether. Excuse me? There's BTC. I think, yeah, COS or something are offering BTC. So when you're talking about a price, you're always talking about a pair. I mean, if I'm talking about the BTC price, then the Bitcoin price, then I'm talking about the Bitcoin price per one Bitcoin. I mean, how many dollars does one Bitcoin cost? A ton, by the way. Really, 8,000 something. How much?
8,130 currently.
8.1. Yeah, it was at 8.4 and now, yeah. So we're always looking at some pair. So once we selected any pair, for example, here we're looking at Ripple versus BTC. Let's look at what we have here. I can't actually select a time frame when I'm full screen. Okay, so here at the top left you can see the 1H, that's the 1 hour time frame. If I switch to 1 day, for example, and just minimize this a bit, I'm going to see the same candlesticks, but now every candlestick is representing an entire day worth of trade. And I can also see some other info like what was the volume of this day's trade. I mean, you can see it's really too small, but the one thing to know about altcoin markets that is very different from forex markets is that altcoin markets actually provide a very valuable information, another information, and that is the volume of a certain time frame. You don't get that when you trade regular options in the regular market, in the traditional market before the cryptocurrency. And volume actually tells us a lot about the behavior of a coin. Specifically, you can see that in the lower part of the screen. For example, this green bar here, this large green bar and large green red bars, they all represent transaction volumes. This means that a lot of buyers bought at this point. And for this specific coin, Ripple, which actually we can see here, if you want to, you know what, let's just dive into this part, okay? This represents 1 day. We see a very large volume of buyers. We see a very small body and 2 large wicks. So there was a lot happening here in this day, in this coin. So we can dive in, change the time frame to, let's say, 1 hour. Let me see, that might be actually more comfortable. Change the time frame to 1 hour and try to find out what happened in this area. Let's find it again. There it is. So this picture here is the same one that we saw represented in 1 candle, but now we're looking at what happened based on hours. And we still see a very big green candle, so the price jumped within 1 hour, which is something that is very unique to altcoin markets. The strong volatility of the market. There are markets that move tens of percents within an hour, within hours, and that's considered, I mean, most altcoins do that. So that's why cryptocurrency is a big, how do you say, Moshe?
Attractive.
It's attractive. It attracts many traders because of that, because of the high volatility. Because if you know what you're doing, you could make tens of percents of profit or loss if you don't within hours. So it's very fast, it's very volatile, most of it, especially compared to traditional trading.
Why is it?
Excuse me?
Why is it?
Why is it more volatile than the... I actually not sure. I'm not sure. It's a good question. You know, David? Why is it?
Volume? There's many analysts. Some of the analysts believe in certain things. So it really depends on, you know, on the articles, on the stuff people say, and so on. For example, you have some fund that invests into coins, and some analyst says, okay, Monero is going to be big, or let's invest into Monero. So they don't invest like $10,000.
Right.
If they go in, they can go in like $500,000.
But that happens in...
This immediately, you know, changes the...
Yes, but that happens in forex markets as well. I mean, there was this was...
Forex markets are much bigger. For example, if you take the Monero market, which is kind of 30 million,
yeah.
Okay, the forex market is billions, so it's a big difference. So it doesn't influence that much. The same thing also happens with regular companies. For example, we have some news that, okay, I don't know, Microsoft has just signed an agreement with us. Yeah, so the same thing. But it's pretty seldom. So with altcoins, there are many of them, and it's pretty volatile because none of them actually has a working product. So everything is like, it's dreams. So we're talking about trading dreams, meanwhile, instead of Bitcoin, a little bit of an Ethereum.
That's actually right. We'll see. Let's see if we can already go to. We'll see coin market cap later, and we'll see some main coins. So I dived just a little bit further into the 30 minutes time frame just to see this. This was that big candle we saw with 2 large wicks. So when we're in the 30 minutes time frame, we see that there was actually a very big body here and here, and then the price went down. So if you actually take these 4 candles and squash them into one, you will get the big candle we saw, or something very similar, because you have an up movement and then a down movement. So this would be the closing price of a 4 candle time frame. But that's okay. So let's see. Right now, let me open this pen. So when we try to understand how exactly a price is being set, I mean, we have someone offering to sell the coin. We have someone wanting to buy the coin. They meet at the market. Actually, here it's on BitterX. How is all of this performs? And let's look at something called the order book. Every market has an order book. The order book represents the current. You can imagine it as actually being within a real market and hearing, the sellers offer their stuff, and buyers are willing or unwilling to pay their price. That's basically what it is. There are a bunch of people that want to sell a certain coin and a bunch of people that want to buy it. The order book represents the current situation of these two forces. There are all kinds of behaviors to the order books, a lot of data that you can get about a coin just from looking at it. Let's just try and understand the basic principles. So every order book will show you the last price, the volume, bid, ask, and high and low. So last price is actually the price of the last transaction that just happened. We can see that here in the market history. And the bid and ask are actually the most important parts. A bid is when I have an asset and I want to sell it, I'm bidding it for, I don't know, X amount of dollars or Ether or whatever. And the ask is actually what someone excuse me, let me rephrase it. When I'm bidding something, I'm offering to buy something for a certain price. And when I'm asking, I'm offering to sell to you for a certain price. Now, these don't always meet at the same point. If we look, for example, at Ether Delta, at a coin you might know, Kin, you will see a very different order book. And for example, here we can see that there are a lot of people that want to buy currently. And when I mean a lot, I mean compared to Ether Delta's transaction volume, which is very low. And we can't really make any assumptions about the price or behavior while the coin is still in Ether Delta. But currently within this ecosystem, there are a lot of people that want to buy, not a lot of people that want to sell, and they don't quite meet at the middle, okay? So the point where the sellers and the buyers meet is called the spread. So a spread, here's the same point. Sometimes you will see that there is a big gap between the lowest ask price and the highest bid price. This gap is called the spread. When this gap is very big, the market is considered an illiquid market. The liquidity of the market is not so high. That means that if you have the asset and now you want to sell it, because you bought it in an ICO, for example, and now you want to sell it, you won't necessarily find buyers at the lowest price. At the lowest current asking price, you won't necessarily find buyers. You're going to have to lower your price. And if you want to buy, you're not necessarily going to find someone that is going to sell you for the current highest bid price. So that means that if you have, just a second, that means that I read a very good example of it. If I have, let's take cash, let's take dollars. Dollars are very liquid, okay? If I want to buy a refrigerator and the refrigerator costs $1,000, and I can get these $1,000, go and buy the refrigerator. But if, for example, I don't have these dollars and all I have is a rare collection of books that is valued at $1,000, that means that my asset, my rare collection of books, the liquidity of this asset is very low, because I'm not going to find a refrigerator seller that is willing to accept this rare collection of books that is worth $1,000. I'm going to have to go and replace that for dollars and then go to that seller and buy the refrigerator. So when we look at an order book of any market, we want to see a very small spread and a kind of an even bid and ask spread. I didn't touch actually the volumes here, but what this means, what the graph's volumes mean, is the number of units that are being, when we look at the asks, okay, the asks are the red, the number of units that are being offered at a certain price, okay? So for Ether currently, we can see that most of the Ether is being offered at a price higher than 399, and buyers are not so willing to buy at these prices.
The current price is 380 something, I think. They're trying to sell at a higher price.
Yeah, that's what I'm saying. So current holders of Ether are very aggressive about setting the price higher. Most current holders, and
there's a big group trying to increase the price.
Yes, this is called the sell wall, but we won't touch it. This part here, it's when a big group of sellers actually set the price higher, and then you'll see a big wall here, and that means that buyers have to accept higher prices.
Can you show the liquidity problem with Kin? You said there would be a gap, but I didn't see it in the example in Ether Delta.
Right. So Ether Delta is crazy. You can understand. No, you can understand the gap here. The gap is exactly 169 minus 164. That's it is not a big gap, but you can see that you have a lot of buyers.
There are just two walls.
What, these walls?
The green one and the red one.
Yeah, but these, I don't even know, you know, the volume is so low. Let's see.
So do you have another example of a gap, like where there is not enough liquidity, how it looks? Maybe another example. I just want to understand visually.
We might be able to find something, but
you need to go to maybe the reverse the order to the lowest coins.
You want to see? Oh, you want to see like really low coins?
Shit coins.
Shit coins. You want with not a lot of volume. Okay, let's take ATM. What? ATM. Yeah, but you know, I don't even know if they're being traded. Let's see if it's on BitterX and I can find it. It's not even on BitterX, so maybe I have a link here. No, let's not open Ether Delta on another window. It took like 10 minutes for that one to load. Okay, we can find one later.
These are not actual trades, right? It's only offer, ask and bid. It's not actual.
Yes, the order book doesn't represent trades. So okay, let's go dive.
So that means that can be an overlap, or the market won't.
There can never be an overlap. If you see an overlap, it's a bug in the CSS.
What is this? Why can it happen that someone doesn't?
If I really what do you mean? Okay. Maybe I didn't quite understand myself. So explain myself. So these are all the asks. This is what people are asking for the current asset they're holding.
So maybe someone is offering more than someone.
Yeah. No. So if you currently are willing to buy at this price and you place an order, your order will be realized.
In the trade book.
Yeah. So let's see what that means.
Yeah, actually, you don't place an order. You accept the bid.
So this is only for
I think an order is placed, but it's immediately fulfilled.
You just meet the ask.
Yeah, it's immediately.
So this reflects only offers that were not traded.
Yes. And when this part moves here, I mean, when people from this part, when people that are very close to the asking price, from the bidding side, for example, are willing to offer a little higher price. Okay, I want to buy this. I want to buy Ether now. Okay, and I'm willing to pay currently only, what's that, 386. But that's not the price. The current price is 387. So I'm gonna, sit there, and some other guy, David, will come to me and say, listen, Ether is going to be a huge thing. It's going to go up to 500 in 2 days, and he convinces me. Then I'm saying, okay, I'm going to take this dollar. I'm going to, take this loss of $1. I'm going to set my price to the actual price, and then I'm going to buy it. But I did move the price currently because I accepted a higher price. So about actually placing orders, every exchange will have this kind of interface. You could set the amount of units you want to buy, for example, Ether versus US dollars. You can actually place the order. If the order is, as you said, is relevant, I mean, if you are trying to buy and you're looking for an asking price that is already available, your order will be fulfilled immediately. If you set another order, your order will go in the order book and fulfilled later, and every market has a history of the buys and sells of the currency.
Is there a priority if I bid something first and someone else bid the same later? Would I be first in the queue to?
Which one will be fulfilled? It's based on units. So you both are going to be placed you both are going to affect the number of units at a certain price. I don't know which one of you will be filled first. I believe the first one that placed the order. What types of orders can we put in a market? So we either have the asset and we want to sell it, or we either want to buy the asset. So if we want to buy the asset, we first have to have the pair that this asset is trading with. So if we want to buy Ether, we're going to have to have dollars if we're trading this pair. So I have dollars, I want to buy Ether. So I'm going to set the units of Ether I'm willing to buy. And place an order. There are two types of orders: limit order and market order. Some markets offer some other kind of orders, but basically a limit order says I am willing to buy at this price, or I'm willing to sell at this price. This is a limit order. You set a price and you say, do the transaction only if someone fulfills it. Only if I'm bidding, do the transaction only if someone asks for this price, or vice versa. A market order means just give me the coin at what price it is. I mean, when you're doing a market order, you're not setting the price that you're expecting to receive or to give.
When you're doing a market bid, it
yes,
will automatically match the first ask or the.
If you're doing a market bid and it's not a limit order, then yes, it will match the last price. It will match actually the lowest ask price if you're looking to buy. And if you're looking to sell and you don't care about the amount, it will match the highest bid price.
But if the volume is higher than what is offered on the lowest?
The volume is higher?
Yeah, I want like to buy 1,000.
Oh, I see. Yeah, so units are placed and your order might not be fulfilled. So if you're looking to buy 1,000 units of something,
the lowest ask doesn't offer 1,000.
Let's say you want to buy 1,000 units of kin, and currently at the price you're asking for, the price you're willing to pay, someone offers only 500 units of kin, so you're gonna get only 500. Your order won't be fulfilled incomplete.
But it will be partly complete.
It will be partially complete.
Is there a reason to use market and not always use limit and just like?
No, you only use market when you're in a hurry and you want the coin now and you're stupid.
Yeah, because it's dangerous. It could be.
Yeah, you don't do that usually.
The one that sold Ether for 20 cents.
The what?
You know, remember this case that someone bought Ether for 20 cents or something?
There was?
Yeah?
Yeah.
He wanted to sell Ether,
Okay.
yeah, and didn't put the limit. So
Oh.
finally he got up to 20 cents or something, 50 cents.
He had an auto sale
Yeah.
bid.
And he was selling like for a couple of $1 million or
So-
something. And
So yeah, people do these mistakes. So don't trade if you don't not sure what you're doing, because once you place the order, the market actually has the permissions to withdraw funds from your actual addresses. So not exactly. I mean, you deposit funds at an address in the market, and it has all the permissions to move funds from and to this address. So if you placed an order, it's going to be either fulfilled or not, but the funds are going to move. So these were like types of orders. You can see there are buy orders and sell orders. These are bids and asks. There are all kinds of other types of orders, like a stop order. That means only sell if it reaches this price. I mean, only place the order if the price is reaching this point. I mean, I could say, for example, I'm holding Ether, and I expect Ether to rise to 400. So I can place an order that says, place all my Ethers for sale only if the price of Ether is reaching 400. So Bittrex will take this order and will wait for that. It won't actually place it on the order book, but once the price reaches there, it will be automatically placed in the order books. Traders use that a lot in something that's called a stop loss. You buy some kind of asset, you expect it to rise, but you're giving yourself some kind of assurance by placing a stop loss at some certain point and hoping that it will, if the price falls, that your stop loss will be invoked and you won't lose a lot of money.
Is there a time limit for the...
Yes, there are also time limit kind of orders, but these are all implementations of, at the end, it's just, like an off-chain thing that looks at the market and decides whether to place the order or not place the order.
I
And
say buy or sell today, but if it didn't match the ask bid price, forget about it.
some interfaces will give you anything you want. Some will give you, there are elaborate orders, but the basic orders are just a limit sell and a limit buy. One last thing, so if you want to take a look at some of the big markets, we'll go to CoinMarketCap, and CoinMarketCap is actually a good place for an overview of coins. If you want to see, for example, if you were currently trading and you were looking at coins that actually have a volume that you can trade. So from my experience, these are coins that have a 24 hours volume of at least 500,000. So we can go into trending, gainers and losers. And we'll see coins, there are coins that went up 157%. And we'll see in the volume, in the 24 hours volume. Let's look at something that's bigger than, okay, so we have ticks, block ticks. I have no idea what coin this is, but it did trade 6 million something in the last 24 hours. So we can go look at that and let's see how that looks on Bittrex. Let's see if it's on Bittrex. Yes, it is. TIX. We can find it here. Okay. Wow, this is volatile.
yeah, but it's like a $2,000 volume or something.
No, that was 6 million in the last, I'm looking currently in the 30 time frame. In the last 24 hours, it had $6 million volume. And it actually jumped, this is what? Let's measure this, for example. So this last jump was a jump of 90% within 8 hours. Okay? And many coins behave that way, and respected coins as well. You can see you can actually expect Kin to do some of these stuff when it, when and if it hits the big exchanges. I mean, if it hits BitREX, for example, you might see stuff like that.
It can be pump and dump too.
Yeah, pump and dumps. Yeah, we're not going to touch it, but yes, there are pump and dumps. But this isn't something very rare to see. A coin that jumps 90% in 8 hours. It doesn't mean much for the integrity of the coin. I mean, this is actually something we don't really want to see happening to Kin too much. We want the coin to be fairly stable and not do these kind of jumps and moves. But a lot of altcoins do that. I'm going to show you a very funny coin. It's called POT. It's a coin for cannabis trading. Now let's see what happened when someone tweeted that, what's his name? No, Snoop Doggy Dogg is going to do a promotion for the coin. Okay, yeah. And he didn't actually do the promotion. Yeah, but it is actually I don't know, pump and dump, I think. A pump and dump, like if we already touched that. So a pump and dump is when someone is promoting, someone is promoting a coin, a group of investors, a group of people that already hold the coin is promoting the coin. It's, by the way, it's totally illegal. Is promoting the coin in ways of exposing internal data or something like that, like accidentally exposing, creating. It's illegal. Creating.
In cryptocurrency, there's no regulations. You can practically do whatever you want.
Yeah, so it does happen. So
it is legal in the crypto space.
It's not legal. It's
unethical, but it's legal.
You cannot catch whoever does.
Okay.
It's hard to catch. These people, by the way, do their stuff in Telegram groups, in closed Telegram groups.
We had plenty of promotions on the Kin Slack also, like pump and dump ads, and we had to pick them out over and over.
Yes, these are actually. If you search for Kin in Twitter, it's very hard to find good information because everything is cluttered with spam. They're tagging Kin, they're tagging the Kin coin, and you can't actually see anything other than pump and dump groups. But basically how it works, a group of people that already hold the coin create a huge hype about the coin. If they succeeded in creating this hype, the coin will start rising. They will try to bump the price up and up. Once it's at their target level, they're going to dump the coin. Dumping the coin means selling. Now the funny part is they're selling to people that have what's called FOMO, that people that see the coin rise very rapidly. They're saying, wow, I have to buy this coin, this is amazing, I'm gonna be rich. They buy the coin and then the coin dumps, and the people that organized the pump are getting the money, and the people that just bought just are left to watch the coin being dumped. So it's a very aggressive pump and dump. So this here is the pump and dump when someone tweeted that what's his name, Snoop Doggy Dogg is going to promote this POT coin. So it started. If we can measure,
I think also there was a big bump with Bitcoin Cash about a week ago, like a huge one. People just moved
yes,
tens
but
of millions from Bitcoin to Bitcoin Cash.
That's right, but that was less of a pump and dump behavior. That was more of a fad and hype thing. More of a fad and hype. There was a big hype, and then there was a fad, and it all just leveled up. A pump and dump occurs very fast, within minutes, sometimes. This specific pump and dump, we can dive in. I think it took like an hour or two. But if you look at the volume of it, that was a 651% move. Okay, so the coin went up 651% and then went down. And you see the candle. It started here. It went all the way to here and then got dumped. So a lot of angry people, which by the way they're stupid again. You see, they did it again here.
Different.
So
They're all high.
what is the blue
What do you expect?
excuse me? What's that? That's the pearl.
The blue.
The bottom.
Yes, no.
There's a blue line.
part.
Yes.
The blue.
This is the volume. This is the you're talking about this.
The blue
This part?
water, no, blue water mark.
This?
Yes.
So this is the volume. This is the volume graph. This is the volume graph for this specific time frame, the green candle. Okay, and this is the volume as a whole. So you can see that the volume is rising here. This specific time frame had a huge buy
So
volume.
it's a day. It's daily.
This one is a day.
daily.
This one is a day.
What's the purple and the red and blue lines? There's a purple area and red and thin red.
This is just an indicator I have opened. This is called Stosh RSI. This is indicators used to, there are plenty of indicators used to analyze the chart.
Okay, so the important question, how do I get rich fast?
So,
Work hard.
how do you get rich
Otherwise,
fast?
you don't get rich.
Basically, okay, no, basically there is actually a good answer for it. I'm not sure you could do that with day trading, but trading with big volumes and some more solid information, like if you have inside information.
Which is illegal, you take advantage of.
Yes,
But
no,
you
I'm
get
not
rich.
talking. I'm not talking about kin. Okay, if you have inside information, no. If you ask, guys from some of the whales that bought into kin in the ICO, that's what they do. They try to get very good insights about a company, and buy at the right times or sell at the right times. That's
But it's
the.
still a gamble, because you can never know what's going to happen.
It's a gamble if you're day trading, but the price, if you have a lot of cash and a lot of assets, then you're not that gambling. You're actually investing, and yeah, you could fall, but it's less volatile for you. Basically, that's it for this talk. I hope it was informative for some of you.
Very much.